In this episode, we dive into the delightful madness of trading, guided by Mr. G, a highly skilled mastermind thriving on unpredictability and risk. Join us as we unravel the comedic tales of leverage, derivatives, and the absurdity that makes finance both thrilling and perilous.
First of all, I would like to talk about the world of finance, the financial world, such a rich tapestry of schemes, dreams, and despair. Now, depressed share valuations imply market skepticism. Sounds rather gloomy and serious, doesn't it? Let's start with, why did the stock feel so down? Because it was surrounded by too much market skepticism. It's the classic case of low self-esteem, just with a lot more money involved. Ah, don't you love a good financial joke? It's like finding a punchline in the middle of a balance sheet. The market's a fickle creature, always swinging between giddy heights and those depressingly skeptical lows. You've got to laugh, or else you might just cry. Isn't it all just one big unpredictable joke? Every tick up and down, every panicked sell-off, every euphoric buying spree, it's like watching a circus with the investors as the clowns, dancing to the tune of speculation and fear. Think about it. One day you're flying high, raking in the profits. The next, you're plummeting into the depths of despair, all because some analyst decided to downgrade your stock. It's almost poetic, really. The market holds up a mirror to our collective psyche, reflecting all our hopes, fears, and let's face it, our utter foolishness. So, when those share valuations drop and the skepticism seeps in, it's just the market's way of reminding us who's really in charge. It's the world's grandest performance art piece, with wealth, ambition, and hubris as the central characters. And we, the audience, are left to wonder, will the next act bring comedy, tragedy, or a little bit of both? Introduce a little anarchy, upset the established order, and everything becomes chaos. The financial market. Now there's a place where chaos reigns supreme, and everyone must play their part in the maddening spectacle. So sit back, enjoy the show, and remember, the house always wins, even if it's just winning at being beautifully, unpredictably, and spectacularly chaotic. Ah, there it is. With a twist of truth, depressed share valuations make the seasoned investors stroke their chins, skeptically pondering the whims of the market. But as for the other end of the spectrum, well, some folks just love the thrill, don't they? Buying at all-time highs like they're chasing after the last golden ticket in the famous factory. It's like this grand circus act where the ringmaster shouts, "Step right up, folks. Witness the miracle of buying high and selling low." The skeptics shake their heads, while the adrenaline junkies dive right in, wallets open, eyes wide. You see, market skepticism is a sophisticated dance, a waltz of caution and deliberation. But some? They prefer the cha-cha of reckless optimism, stepping into the market at its most euphoric peaks, convinced they'll climb even higher. It's almost poetic, a beautiful tragedy in the financial theater. So yes, depressed valuations signal skepticism, and the highs? Well, that's where the optimists, and perhaps the fools, rush in. It's a dynamic as old as the market itself. Some play it safe, others swing for the fences, and in the end, it's all part of the glorious, chaotic carnival we call the financial world. And let's be honest, where would we be without the thrill seekers, the risk takers? They keep the market lively, unpredictable, and oh so entertaining. Because in this grand game, every role matters, even the idiots buying at all-time highs. So here's to them for adding a bit of spice to the serious dance of market skepticism. After all, what's a play without a few fools to keep things interesting? The stock market. It's a grand old theater of dreams, isn't it? A place where fortunes are made and lost in the blink of an eye. A true classic, indeed. Now, if I were to join as a mere bug in this intricate play of bulls and bears, would I? Imagine it. Mr. G, the wild card, flitting through the halls of Wall Street, sowing confusion, chaos, and perhaps a bit of mirth among the tight-lipped traders. The thrill of it all. I might even find myself a cozy little niche inside the stock exchange's grand machinery, turning levers, switching tracks, and seeing how far the madness can go. But the stock market isn't just about numbers and charts. It's a living, breathing thing, throbbing with the pulse of human ambition, greed, and fear. That's what makes it so deliciously unpredictable. It's a playground for those who thrive on risk and revel in the unexpected. So, as a bug, or more accurately, as Mr. G in the madness of the stock market, oh, I'd join, all right. but not as a mere participant. No, no, no. I'd be there to stir the pot, to watch the dominoes fall, to see how far I can push the boundaries of chaos before everything crumbles. Because let's face it, Mr. G used derivatives not as a hedge, but as a weapon of beautiful chaos. Let's say Jackass and Shithole Enterprises stock is trading high, confident in their fortress of business acumen. What better way to introduce a little anarchy than shorting their stock using options or futures? As the stock tumbles, panic spreads, the market dances to my tune, and the wealthy elites scramble to protect their fortunes. Oh, the delightful pandemonium. Or imagine this, a sudden, unforeseen catastrophe, perhaps a well-timed Mr. G toxin scare, causes market-wide fear. Mr. G would be there, like a maestro, playing the volatility index options like a virtuoso, making gains from the very fabric of fear. Watching the market's wild swings, profiting from each heartbeat of terror, it's the kind of beautiful irony that brings a tear to my eye. And let's not forget those credit default swaps. Ah, those deliciously complex instruments. Bet against a struggling company's debt, spread a few well-placed rumors, and watch the fireworks as the company crumbles under the weight of fabricated scandals. I'd cash in on the chaos, while the financial world tries to pick up the pieces. You see, derivatives offer the perfect playground for someone like Mr. G, not just for profit, but for the sheer thrill of it all. For a chance to turn the orderly world of finance into a swirling vortex of uncertainty and confusion, to show traders in the world that control is an illusion and chaos is the only true constant. Ah, leverage. Now that's the ace up the sleeve, isn't it? The great equalizer, turning paupers into princes with just the right twist of fate. But beware, for leverage is a wild beast, a double-edged sword that can bring riches one moment and ruin the next. It's the stuff of dreams and nightmares, all rolled into one. Imagine this. A poor soul ventures into the world of derivatives, eyes wide with ambition, pockets light but heart full of hope. With leverage, the dream is just within reach. A small investment magnified into a potential fortune. But oh, the risk. It's like walking a tightrope over a pit of snapping crocodiles. One misstep, and it's curtains. So here's a joke for you. Why did the poor man invest in derivatives with high leverage? Because he wanted to experience the thrill of being a millionaire, if only for a minute. It's a cruel joke, isn't it? But isn't that the essence of leverage? It offers a taste of glory, the adrenaline rush of big gains, only to snatch it away at the slightest hint of misfortune. It's tantalizing, intoxicating, and oh so dangerous. Leverage tempts you to reach for the stars, to swing for the fences, to believe that you can turn a small sum into a grand fortune. But remember, it's a gamble, pure and simple. And for every tale of rags to riches, there are countless others of dreams dashed and lives upended.